Alrighty, we are live. Hey traders. Hey traders, hey traders. I want to do this live stream for you because I want to teach you some of the simple but really powerful chart reading techniques to understanding these markets and understanding how to get ahead in these markets, because the better you can read the chart, the better trader you'll be. Okay. And so I'm going to be sharing some things with you that's going to really help you out and really help you get ahead in the markets today. So firstly, before I do start, guys, let me start off with the typical disclaimer. Guys, do not place a trade based on what you're seeing this session today. There's no guarantees of making a profit in the markets. And especially if you're not following a plan and all that sort of down home country goodness. So this session here is just general advice only. And so I want to make sure you understand that. Also, guys, I'm running a bit of a marketing test right now. So I've got a bit of a free gift for you. If you're struggling with the trading right now and you'd like to get ahead with the foundations, the trading systems, chart reading, mindset, those areas, and you want something that's going to help you, I've got a bit of a free gift. So go to johnsfreegift.com, and you can watch a video about that to see what that's all about and see what the free gift is. Also, if you're interested in coming living with me for 3 days, where you live with me in $1 million house, and I teach you all about trading. Everything is about trading, where you actually live with me, and then I trade the stock market, the futures, and the forex market live right in front of you, where you can really see what it takes to be a professional trader, be a successful trader long term. Then go to johnsevent.com. Again, you can watch a video about that to see all the details about that. So go to johnsevent.com. Now, that's out of the way now, guys. Now, one thing I want to walk you through is one thing that a lot of people have problems with when it comes to trading these markets, when it comes to reading these charts and trading these markets, is one of the biggest things that stops traders from getting ahead is not understanding how the markets work as a whole, like how they actually work as a whole. And this is something that has made a massive difference in the way that I look at the markets, the way that I think about the markets, and the way that I approach these markets. You see, through my entire trading career, I have always tried to. I'm not sure why, but I veered away from a lot of the fundamentals and stuff like that, because it didn't make sense to me. Like, how can I actually get some probability based on a fundamental? It's really hard, right? Like, even to this day, it's like, do we short the market? Do we go long the market based on what's happening fundamentally? Because fundamentally, we can what? We can see that there's a lot of good stuff that's happening in the markets right now. Unemployment, blah, blah, blah. But then also you can see there's a lot of bad stuff. Like, what do you focus on? What fundamentals do you focus on? Because if you watch one report or one YouTube video, they're saying how bad the economy is right now and how things are getting, how the bubble's being bigger and the bubble's going to explode soon. They've been saying that for years, right? And how it's going to come down. And then you watch another YouTube video or another report, and they're pointing out all the facts, right? How all these other facts about why the economy is still strong and blah, 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 all that sort of stuff. So throughout my time, throughout me, I said, okay, for me to be able to feed my family, I want to be able to have something that I can rely on. I can't rely on just a YouTube video or just something else. I need to have something that I can at least rely on. So I said, okay, I want to understand. Obviously, we look at these graphs, right? We'll look at these charts here. Let me just bring up a blank candlestick chart here for a minute. All right. So I'm going to bring up a blank candlestick chart here for a minute. And we look at this candlestick chart here, okay? And obviously, when we're looking at these markets and we're trading these markets, I've always said, okay, I want to understand how these markets really work. Like how do they work, and how do these graphs work, and how do the charts work, so I can get an understanding of what's going on right now, and how do I start to move forward, and how do I start to move forward in a much more of a higher probability way instead of just at the seat of the pants. Because the market does give us some signs on what's going on and what's happening, and what's going on. Now, really, there's three different sort of phases the market goes in. It goes in an upward phase, which is an uptrend, or it goes into a sideways phase where there's no one in control, or it goes into a downward phase, right? A downtrend. Now, there's 3 different types of phases through there. Now, if you're trading through the phase where the market's going sideways, you realize, right, that that's a very low probability time, right? Because there's no true strong direction out of that. So the market's always given us some signs of what's going on and so on and so forth. Now, there's a lot that I can really share with you when it comes to reading these charts and breaking it down into a finite, or no, not finite, but breaking it down into some really strategies, really simple strategy here. But I want to start off with the most basic one, but it's the most powerful one on what's going on in the markets and how you read the markets and how you read the charts. And that is, let me bring this up through here. Right? So I'm going to bring up the Dow Jones here for a minute. And that is when you're looking at the markets, okay? When you're looking at the markets and you're looking at the charts, there's the market is giving us some guidance, okay? And what we want to do, we want to trade what we see, not what we think, hope, or fear. And unfortunately, what a lot of people do is that they may see the market telling us or doing something, but then they try to go against the market. They try to use their ego and they try to fight the market. So, and what I'm talking about is a thing called, peaks and troughs, or highs and lows. The market is always giving us some sort of guidance through there. And if I bring up my good old snagger tool here for a minute, and I'm going to draw this here, the market's giving us some guidance on what's going on. So in an upward trend, and this, for some of you guys, this might sound basic, but if it sounds basic, it's one of the most powerful things. It's the most basic one, but it's the most powerful thing out there because it's how the markets work. And the market is always giving us some guidance on what's going on right now. So if you go back and look at my video where I talked about the #1 pattern that forms on all stock market crashes, this is it. And it's how the markets work. And when you understand how the markets work, it doesn't mean it's going to continue in that direction. So if we had an upward trend, we have a high, and then we have a higher low, and then we have a high and a higher low and a high and a higher low, right? So high, and what's this here? This is a high, a higher low, breaking past previous highs. Who's in control? Buyers. A higher low, breaking past previous highs. Who's in control? Buyers. A higher low, breaking past previous high. Who's in control? Buyers. Right? So therefore, we have an upward trend. Right? So I'm going to go into a bit more detail about like how do you determine whether the higher low is strong and so on and so forth. But that's an upward trend. So whenever we see this, we never know when the upward trend is going to end, right? So if you're looking at a trend like this, where's the biggest, highest probability trades? Obviously with the trend. Now, obviously, yes, you need some sort of a strategy to give you a really good timing to get in on that trend. But I'm just talking chart reading strategies here, right? Just how do we read the chart better so we know what's going on right now? So as we can see, right? High, low, high, low, higher, low, breaking past previous highs. Same as if we go for a downward trend, right? If the market goes lower high, breaking past previous lows, lower high, breaking past previous lows, lower high, breaking past previous lows. So what happens here with the downtrend? We have the lower high breaking past previous lows, the lower high breaking past previous lows, the lower high breaking past previous lows. So if we have a lower high and it's breaking past previous lows, more times than not, the trend will continue, right? We see this all the time on all the markets. If we have a higher low breaking past previous highs, the trend is likely to continue. That's where we see a trend, right? And then you'd find maybe 10, maybe 20% of the time that it may break break past the previous resistance here, like it does here, like over here, and then it may fail and then break back down, right? But this here is probably likely to happen maybe 10% of the time, and the rest here, breaking past previous highs, is likely to continue, right? This also could be some sort of end of trend. Now, I don't want to complicate things too much, but if you go back and study the charts, generally speaking, there's 3 major stair steps in any trend. 1, 2, 3, and on the third stair step, it tends to start to, what do they call it? Peter out. So it tends to start to peter out in the markets. Same for the downward trend. A lot of the times you'll find that where the market has three major stair steps in that direction. So one thing that I want, so by look at this upward trend and we have a look at the downward trend. But what happens if the market's going sideways, right? Market's doing something like this, where it's not making higher lows breaking past previous highs, and it's not making lower highs breaking past previous lows. So it's in a sideways trend, right? So this is what we call time, or this is what we call where the market's resting. So if this is true, right, and we have trends in place and so on and so forth, one of the most important, one of the most powerful things that I've seen is that depending on the retracement of that higher low. So what I mean by that is this: if I bring this up here, let me bring up, say, an orange here. If the market runs up, comes back down, and retraces here, and this is what we call the 50% fib mark. If the market comes down to that level or less than, and then continues up, then the market is, then that's what we call strong momentum. The market is in an upward trend, which is momentum to the upside. But if it comes back down, retraces less than 50% and then continues up, that's now what you have, a strong momentum. Less than 50%. Oh, what was this here? This is maybe 70% retracement. Oh, okay. And then you can see how it's starting to fail through here as an example. So the thing here, guys, is that with the retracements, whenever you start to see a retracement in the market where it's in a clear defined trend, but you have a less than 50% retracement, it's very, very, very high probability that the market is likely to continue, especially if you get a breaking past what? Breaking past significant highs. So one thing I want to share with you in here, and so that's the reason why I use all of these tools that I'm telling you right now in my trading system, in the way that I trade the markets. So let me just bring up. I want to bring up a trade here as an example for you and share with you what I mean by this. Right, 50% or less in the markets. Okay, and let me bring this up here. What's important? All right, so let's actually continue on here. So I just saw the chat box. G'day from USA. Hey, Savage. You're up late, champion. So one thing I want to, but look at this here, okay? Look at this here. So if I bring up, say, a recent trade that I took this week here, it was on the Nasdaq, all right? So on the Nasdaq here. So you can see here on the Nasdaq, this is a trade that I took. And if you used a Fibonacci tool, you have this low point through here. In fact, I'll just take a screenshot of that so you can see it a bit better. So this is the screenshot here, right? So if you measure from the low point, so the low point of the move really started somewhere around about here, low point to the high point, you probably have 50%, looks like somewhere 50% is around there somewhere, 60% level, 30% level, and so on and so forth, right? So you have these levels that are in place. So 30%, 38%, 50%, 62%. But notice this particular setup. This is the reason why it's so powerful, is because what? It retraced less than 50%. And then we got what? A breakout bar breaking above what? Resistance. So you can see back over here as well too, right? We had the low. This higher low is less than 50% of the retracement from this move here. Then it came down, and then we had a breakout bar breaking above this resistance level. What did I say before? If you get a higher low, especially if it's 50% or less, 50% or less in 50% or less in the what's the word for it? Yeah, 50% or less in the markets, and then you get a breakout bar or a breakout bar breaking above the significant resistance. It's now strong momentum, and it's likely to continue. And as you can see, this actually had a nice run on the upside. So it's the same for if I just close this down, let me close this down. And it's same for the downtrend as well too. Right, so less than 50% on the downside, and you can see that there. So let me actually bring up a less than 50% on the downside on a downtrend analysis on a setup that happened just recently. And I will share with you. So what I'm doing here, guys, I'm giving you some theory. I'm giving you some things that are on a theory basis by looking at here, but I'm trying to back up why I use these strategies in my system is because it's very high probability in the way that, you know, in the way that it works. So let me just, right? So here. So as you can see, right, by looking at this move here, as you can see, if I bring up, and this is actually a pretty, right, but what did we have here, right? We had this high up, we had this high point up here, and then we had this low point down here. Oh, you know what? Even if we did it from this high point up through here, so let me remove that, remove that. So if we went from the high point here to this low point here, we probably had the 38% there, maybe 50% there, and maybe 60% there, or somewhere around about there, right? So as you can see, right, what was it? It was what? It was a less than 50%. So firstly, what do we have here? Let me take these off the screen here. So firstly, what do we have here? We had a high, we had a low, and we had a lower high, right? Breaking past previous lows. What does that mean? It's now likely to continue. Okay, cool. Then what do we have here, right? We had this from this point here, this D, and then retracement was less than 50%. So the 50% mark was less than, it was either at 50% or less than 50%, and then breaking down. What does that mean? Strong momentum. So we had a downtrend, high, lower high, less than 50% retracement, and obviously a breakout bar breaking past what? Support. So remember I said before, right, when we have a lower high breaking past previous support, it's now likely to continue. And you can see this thing ran on ran on for a nice support level. So this is one of the most important things to understand, but not just the trend, but how much of that pullback is happening right now in the markets, because it's giving you a bit of a sign of what's going on. Now, that doesn't happen all the time. Like sometimes you'll get a market where it runs up through here and then we have a bit of a sideways movement and then we have a run up through there, right? That's probably going to be some sort of false breakout, and it's probably going to start to do that. The reason why is because if we had a big run up, we need a lot more sideways movement through here. So that's the first one there. And if you look at the market right now as I speak, and this is why if I look at the market right now, right? So if I look at the stock market right now as I speak, we can see what? We can clearly see, and even if I go back over to here, you know, let me just take a screenshot. Let me take a screenshot of this. All right, and what do we have here, right? So we have a low, a high, a higher low. Not much going on through there. Is a very, you could class that, right? So but we had a low, came down, lower low. What's this? Lower high, equal low. What's this? Lower high. Oh, look what happened here, right? It broke past what? Previous support. That's when we had the what? The run. Now, the question is, how far is it going to run? No one knows, right? But the answer, the answer to that is that it has a very high probability of continuing, which is now likely to make, which is now likely to generate a nice profit there, right? Same for what's happening right now, right? So market's running up, we have a low, a higher low, and now we're having a higher low, breaking past previous resistance, where it's not really strongly breaking past that yet, but it's just slightly breaking past that. But what do we still have here? An upward trend. So same for if we go have a look at the S&P 500, right? Let's bring up the S&P 500 here for a minute. Let's bring up just bring up here the last, say, 3 months. The thing is, like, when you look at this 3-month trend here, right? Let me bring this up through here. When you look at this 3-month trend, the last 3 months through here, who's clearly in control of this market right now? It doesn't, and remember, it doesn't matter what market you're looking at. This is how all markets work, right? Obviously bias, right? We had an up, sideways. Look at these small bars, breakout bar, up, pullback. What's this? Higher, low, up, pullback. What's that? Higher, low, up, pullback. What's that? Higher, low. And now we're going up again. So as you can see, right, and that's why if you've been watching some of my live streams lately, that I've always been saying, like, don't fight the market, because you never, if you're trying to, like, if you're trying to short the market right now, it's a very low probability time to do that, right? Why? Because you're in an upward trend. Now, if you were looking to get into an upward trend, when would be the smartest time to try to jump on or in a trend? When would be the smartest time? Now, I'm not telling you to do this, by the way. I actually have this wrapped up with my trading system, and I mentioned to you just a minute ago about that. But when will be the smartest time? Would it be A, when the market has already gone for a run, or B, after a pullback, but it's still making higher lows? Oh, of course, B, right? Because remember, how does the market work? How does the market work? It works like what? Let me bring this up here. Right? How does the market work? The market what? How the markets work is they go for a run, and then guess what? At some point, they're going to have what? A pullback. And then they go for a run, and then at some point, they're going to have a pullback. Sometimes they go for a really big run like that, right? Where it gets really overextended, right? You can never predict that. What we're talking about here is probabilities. So if you're looking to jump in on any sort of trend, any sort of significant trend, and you say, okay, I understand how I can't fight this market, but if I'm looking to get in on a trend, where is the highest probability time? Well, the highest probability time is where, if I share with you my Nasdaq trade, where is the highest probability time to jump on a trend? So firstly, people that are trying to short the market right now, so people that are trying to short the market right now, they're going against the market, right? So they think they're smarter than the markets, and that's why they're going to lose 9 times out of 10. And it's not about me being right. It's about saying don't fight it right now. But if we're looking at the market as I speak right now, by looking at this, what's going on? The market has gone for a run, right? So what if we're looking at, say, the S&P 500 right now as I speak, right? What could we be expecting sometime soon out of the S&P? A pullback. Why? Because see how it's already been going for a run for quite some time. Now, you never know how long that run is going to be, but notice how the market, the S&P does that, right? It goes for a run and it has some sort of a pullback. And let me bring this up through here. Let me bring this over through here, right? So look at this here. What do? We go for a run, then we have a pullback. This one here was a sideways pullback. Go for a run, a little pullback. Go for a run, pullback. Go for a run. What happens? Oh, easy, Tiger. Go for a pullback, right? So this was slightly down, and then I go for another run. Higher low, higher low, higher low, higher low. This one here was a bit of a deeper low, but this one here, what was this? This was less than 50%. Continuation. So as you can see, right, like whenever you're looking at the markets, and what am I looking at right now? Nothing but the candlesticks. And notice I'm not referencing the candlesticks itself. Oh, well, that's a bullish engulfing, and this is an up candle, and this is a down candle, and all that sort of stuff. What am I doing? I'm reading the picture as a whole, right? Now, I'm looking at a 3-month daily chart right now, but it doesn't matter what market you're looking at. If you are fighting that trend, you are always going to come unstuck. Always going to be coming unstuck in the way that you are viewing these markets, in the way that you're viewing these trades. Because when you're trying to get ahead in the markets, so many people are trying to pick the tops. Like I know someone back here in March was starting to short it. And then they're still short right now. And I know that person, that person hasn't been on my live streams for a while. And it's not that I'm right. Guys, I'm telling you right now, I'm only saying that because whenever, like, trying to outsmart the market is always right. And until the market starts to change its tune from an uptrend to a downtrend or uptrend to no one in, maybe even no one in control, we cannot fight the market. But that's what I was saying before, right? If you're looking at, if you notice that it's in an upward trend, where's the highest probability trades? With the markets. Okay, now, where would be the highest probability trades with that, with this trend? Is it A, where it is right now after it's been going up for maybe a few weeks? Or B, is it after the market has had a bit of a pullback and then you try to jump on that trend? Well, obviously B, right? You wait for a bit of a pullback and then you wait for a turning point and then you jump on that trend. But you wait for the market to tell you that first. Now, what am I talking about, like waiting for the market to tell you? It's quite simple, right? It's quite simple when we're looking at this here. So as you can see, all that's through there. Let me just delete this here. So turning points simply just means when the market has a pullback, and I'm going to delete everything off the screen here for a minute because we don't need to have any of this here. This is the most powerful stuff, guys, but this is where, like, as you can see, right, like I'm getting all this from the chart itself with no indicators. And that's why you can become an amazing trader. But what is this here? We had a run. We had a pullback. Then what do we have here? What was this here? A pullback? It was a small pullback. Wasn't a big pullback, right? It wasn't even a pullback, right? It's just sideways. It's classed as a pullback. And then what? This is a bar breaking above significant resistance. Oh, maybe that's a good time now to enter. Remember I said before, right? If it's a higher low breaking past significant resistance, the trend is now likely to continue. Oh, you would have made a profit there. Bit of a pullback. Oh, what is this here? So we had breaking past significant resistance. Next couple of days, you would have made a profit there. Oh, what happened here? A bit of a pullback, breakout bar, significant resistance, broke above it. It actually went sideways for a couple of days, but a few days later, you would have made a profit. Oh, pullback, had a breakout bar, broke above resistance, and then ran on for a little bit, didn't it? Ran on for a little bit, but didn't do much that time. And now what's happening right now as I speak? Breakout bar, and now it's ran on for a few days. So let's just call this for what it really is. Trade number one, three or 4 days later, major profit. Trade number two, 3 or 4 days later, major profit. Trade number four, call it break even, a small loss. And trade number five, if you win it 3 or 4 days later, made a profit. You know what? This is just too difficult, you know? But I'm using the real life chart here and I'm breaking this down because it's, you know, it's a Sunday where I am right now. And it's obviously a Saturday for people overseas, but I'm trying to use this time to help you guys really understand that this is how the markets work. So if you're trying to get in, and that's why I always say, right, remember I said before, if you notice an upward trend and the market's already gone for a run, very bad time to go long. Why? Because we're likely to get a pullback. Very bad time that as the market goes up a little bit, we're likely to get a pullback. And so on and so forth. So what's happening right now, right? We're likely to get some sort of a pullback here, aren't we? Now, it may or may not happen, but what we're looking at is like, how do the markets work? By understanding just this one simple thing about the highs and lows, the peaks and troughs, and flowing and going with that. And when you have a nice trend like you can see here, please don't fight it. Because the market, as you can see, right, just one simple strategy like I just said with there. Now, what do they do there? Let me do this here. I started off with this graph here by saying, you know what? If we get a higher low breaking past previous highs, it's likely to continue. Higher low breaking past previous highs, that's likely to continue. Higher low breaking past previous highs, likely to continue. Right? Remember I said that before? And lower lows breaking past previous lows, likely to continue. Now, here's the thing. Here is the thing, guys. And this is where it's like, it's so powerful when you really look at it, right? It's like, wow, I get all that from just the chart and there's nothing on there apart from not even a volume or moving average or nothing. Right? You get all this from the one chart and it just shares this with you. And remember I said before that probably 9 times out of 10, it's likely to continue. And that one time it doesn't. Well, if you start to look at the market, look what happened here, right? It's actually, every time we've had some sort of pullback, it's actually continued. Pullback, it's a continued. Pullback, it's a continued. Pullback, it's a continued. I guarantee you right now, if that's all you did is just wait for that there and you waited for some sort of a nice trend. Now, if you're going to that, I would use some sort of a moving average, like maybe If you're looking at a daily chart, maybe a couple of month moving average, you know, so maybe, you know, it's just to see where the angle is. But even without that, right, look at this here. Exactly what I said there a minute ago. Right. And the thing is this, guys, is that once again, how do the markets work? They go for a run, then they have some sort of a pullback. Now, sometimes the pullback can be sideways. You know, you get variations of the pullback, right? Sometimes you get a bit of a sideways pullback. Like, look at this here, right? Sideways pullback, breaking above the high. Couple of days run. Then we had another pullback, and then we had another run. So we had a run, pullback, run, pullback, run, pullback. Now we're going for another run again, aren't we? But what are we expecting sometime soon here? We're expecting what? A pullback. Why? Because that's how the markets work. They go for a run, and as you can see, like clockwork, we get pullbacks. Now, sometimes it's a deep pullback, sometimes it's a much bigger pullback, and so on and so forth, isn't it? But what's the most important thing we're looking at here? The trend. Is there some sort of clear trend in place? Because if all you did was wait for the pullback and take the first big up bar. So let me actually, you know what? Let me walk you through this now. So that's that point through there. Okay. Now, if you're looking at the markets, right? If you're looking at the stock market itself, okay, there's a couple of different bars you can look at. If you get small bars, like you get a small bar, like a doji, like all just maybe little small bars like this. This is really, there's indecision there. But if you get a strong candle that looks like this, oh man, that's a big candle, isn't it? You know, like a breakout candle. What is that showing? That's showing confidence in that direction. Showing confidence in that direction. Now, let's actually rewind this back a little bit here, right? We can, and so, okay, you might say, okay, you know what, John? All I'm going to do is I'm going to wait for a trend. I'm going to wait for a clear trend to be in place. And then I'm going to wait for a pullback. And I'm going to take the very first breakout bar. It's called a bullish up candle, where it opens and closes in opposite thirds. Opens and closes that. So it like this is basically what it looks like, right? Opens and closes in opposite thirds. And when I get that, after the market has had a bit of a pullback, if this is the first one, but we've got a nice upward trend in place, and this is less than 50%, I'm going to take that as a trade. Just by using that alone, let's see how well you would have done. So firstly, let's just use the Nasdaq here, right? So what do we have here? So we have what? We have the market going for a run, and then we have a pullback. What is this here? The first what? The first up candle, and then 3 or 4 days later went for a nice run. The market pulled back, had an up candle, had a nice pullback. It wasn't really big through there, was it? Nothing there. No, big pullback. Oh, look, what's this here? A nice big up candle. After what? A pullback. Because there wasn't really big up candles through here, was there? They were quite small. I'm talking about something that actually stands out. So notice how this one is a bit thicker here. So you had a bit wicker there, but look at there. Pullback, up candle. So that would have been one trade, profit. Pullback, up candle, another trade, profit. Now, if you did take this here, this up candle, what was the problem? Why was this a sucker candle? Why? Because it's how the markets, remember? Say it with me. It's how the markets work. When they go for a run for a while, and then you get some sort of a breakout candle, some sort of up candle, what does that mean? It means it's probably likely to be the end of the move, right? Because why? We've already been going up for a while, and then the market pulls back and never gone up again. So if you're looking at that there, right, there's only been really 2 sideways periods and a nice bullish up candle. Trade 1. Pull back here, nice bullish up candle. Trade number 2. 3 or 4 days later, take a profit. So as you can see, right, like I'm not telling you to go trade based on this, guys. Like you need to devise your own trading plan and so on and so forth. But I'm using this as a general guide to tell you that trading doesn't have to be that difficult in the markets. We just have to understand how the markets work and flow with the markets. So once again, but if you go back to say, what was I thinking? What was I thinking just a minute ago? I lost my train of thought. So anyway, so yeah, so that's basically what we're looking at there, right? So as you can see, right, look at this big up candle here. Nice pullback, big up candle. What is this here? If we go from what? We go from the low to the high. That's what? Oh, that's actually 60%, but it's still continued up nice, isn't it? Big up candle. That was actually 60%. Yep. So right on 60% and went down. This one through here, this one through here. Oh, look at that there. That was actually what? See that there? Right on 50% retracement. And then it continued. See, notice this one here stopped right on 60% and then continued. Right on 50% and then continued. Really, really, really awesome. It really, really, really is. Now, you're not always going to get clear trends like we're seeing right now on the indices and so on and so forth. It's not always going to be very, very, very clear trend. But in a nutshell, guys, in a nutshell, if you are looking at the market and the market is very, very, very clearly recently telling you that it's doing something, but you are fighting against it, please don't. Because the market is always trying to tell us what's going on. And if we're trying to pick a top or bottom, that's why I say never trade based on what you think, hope, or fear, because every time you trade based on what you think, hope, or fear, it's always a wrong idea. That's why even if you do follow a trend following system, it's so important that you don't get in as the market. If the market's like right now, right, the market's been going up for a few weeks, that's the wrong time to get into it. Why? Because the market is due for some sort of a pullback. So understand this maybe terminologies, maybe understanding of these markets, you start to get a guidance on what's going on. So if I bring that up here and I bring up, say, oh no, let's actually bring up gold right now, right? Just use this on gold, right? It's just no fluff, no fillers. Let's just use this on gold right now. Oh, what is this, guys? What is this? This is a what? This is an upward movement followed by what? Let me delete everything on the screen here. This is an upward movement followed by a pullback. What is that? Is that a big up bar? Yes. Is it closing bars previous highs? Yeah. If you bought gold that day on the close here, 3 or 4 days later, would you make a profit? Interesting. Oh, look at this one here. Sideways, up bar. Would you make a profit? No. Oh, that was a loss. Bum. Lost there. So let's look at this here. So the thing is, guys, is the whole point is like you wouldn't just trade based on that, right? Wouldn't just trade based on that. Now, if you look at this, right, notice, all right, I'm going to get to this here. Why did this one here fail and this one here didn't? I'll give you a bit of a clue. So notice how this market was going sideways first, and then we had the breakout. See how this, even the candles before it were just sideways, and then we had the breakout. But look at this here, right? We had sideways, then we had 1, 2, 3 upward. See how the market was going up, and then the market ran up, and then it failed. So I love taking this type of setup here, sideways breakout. I don't like taking when the market runs up and then goes for a breakout. But now we're just talking about this here, but we're not talking about, like, I'm not trying to teach you a trading system here. Sounds like I am, but yeah, you can see what I'm saying there. So anyway, let's actually, so we can see that through there, right? So, but let's actually have a look through here. Let's actually see what's going on. So what do we have here? We have a higher low, right? So we have a high low through here. Okay. So buyers in control, nice little 50% retracement, and away it goes. Came back down. Nice little 50% retracement, came back up, and then came down and I said, what? I came down and did what? Oh, what's this low point? What is this? This is a what? This is a lower low. Oh, what does that mean? Doesn't mean anything right now, does it? Because remember, for a downtrend, what do we need for a downtrend? Let's bring this up here. We need what? We need a lower low and a lower high breaking past previous lows, don't we? So breaking past previous lows. So we need to wait for it to break past previous lows for the confirmation of the trend. Now, we go back to gold right now. What do we get? What are we getting here? Did we get a lower high? Yes. Have we broken past previous lows yet? Yes or no? The answer is no, right? Right, so this is previous lows through. Notice we're not getting a break past our previous lows yet. Notice we're getting just some sort of sideways movement, i.e. what? A pullback, right? A pullback. So if we get a nice breakdown candle breaking past previous lows, what does that mean? The trend, which is what? Down then, because lower high, breaking past previous low, now is likely to continue. Let's go to silver here for a minute. Let's erase everything off silver here. What do we have here? Low, pullback, higher low. We have a higher low through here. Broke past previous highs back here. So we had a high, higher low, breaking past previous highs. Then we had a higher low, didn't break past previous highs. What does that mean? Warning, warning, warning. Remember, if we get a higher low breaking past previous highs, the trend is now likely to what? To continue. We get a higher low breaking past previous highs, the trend is likely to continue. Now, likely is the word, okay? But then what happened here? We actually had a little run up, then another pullback, and notice how really this was the first sign here of weakness. Why? So notice how we did break past previous highs, but it failed really quickly. That was the first warning sign that this is not a strong upward trend. Then we got a high low, then a bit of a double top formation. It didn't break past previous lows. And now guess what we're getting? We're now getting what? A low. So this is clearly a lower low to these both lows here. This is a lower high. Have we broken past previous lows yet? No, we haven't yet, have we? What are we getting right now? We're getting what? Just a pullback, right? Or sideways movement. But if we get a breakdown like here, like a nice breakdown candle out of silver, what does that mean? We now have a lower low, a lower high, breaking past previous lows. What does that mean? The trend is now likely to continue down. So this is just reading, this is just using this one simple analysis here, guys, this one simple technique here this is so simple, but it's so powerful. And as you can see, right, it has nothing to do with the trend lines, has nothing to do with moving averages, has nothing to do with indicators, has nothing to do with support and resistance lines at all. It has nothing to do with the actual candles itself. You know, like this is a bullish arming, and this is an engulfing, and this is a hammer, and this is yada yada yada, right? I'm just using it because it's the candlestick chart. We could easily go back and just use this chart here, right? Or this chart here, which is just an open highlight close chart. But what are we looking for? We're just looking to see what is the market telling us right now. So right now we're getting what on silver? A lower low and a lower high. If we get and now we're getting what? Just a nice pullback, nice sideways pivot through. If we get a breakdown through here, my goodness, this could be that might even be a short for me. It actually looks like it's setting up for, depending on the breakout bar, that actually may be a short for me. I may go short silver, but I need to see the breakout bar first. If it is going to break out first, right? Because what could this also be? This is why we need to be flexible with the markets. This also could be what? A double bottom. And then if the market starts to do something like this, then maybe the buyers are going to come back in control. You know what I mean? Like that could happen as well too. You need to be flexible. And that's why I always say, trade what you see. Now, what are we doing here? We're just trading off what? We're just trading off the chart itself. And it's just so, it's such a simple thing when I start to go over this, as you can see in this session, but I really wanted to walk you through, you know, I could spend a long time, guys, you know, walking you through this. If you're interested in stuff like this, if you're interested in stuff like this, then go to the John's free gift, and in that free gift package there, in what I'm doing there, you'll be able to learn more techniques like this. If you just want to get started and you're just getting started, then go to johnsfreegift.com right now, and in that free gift package, that little free gift that I'm doing right now, I teach a lot of techniques like this and trading systems and a whole bunch of other things like this, right? So you're going to learn that. But if you really want to master this, then go to johnsevent.com, where you can come and live with me for 3 days. And I'm doing teaching you stuff like this for 3 days straight, plus also trading the markets, as you can see, like what I'm teaching right now in real time. And once you see a really good quality setup, bam, bam, bam. Because remember, how do the markets work? Especially when you got a nice trend in place. Higher lows, higher highs, breaking past previous highs. Right. And so I remember, but then every single trading system has a success rate. So you've got to overlay that as well too. So I am not telling you no way, shape or form to go out there and start to place a trade based on what you're seeing in this session today. I am no way saying that. What am I saying here, guys? That you got to respect the market. 2, trade what you see. 3, understand how the markets work, which is I'm sharing with you right now. And 4, if the market is doing something like this on the Dow Jones or even the S&P 500, and the market is doing this, you trying to short the market right now, you are gambling, you're risky, and 9 times out of 10, what does the market do? Continues up, especially if you've got a very nice upward trend. Now, remember what I also said, right? Just because we have an upward trend doesn't mean we're not going to get pullbacks. How do the markets work? And I'll keep saying that, right? Because this is how you go back to the 1950s, right? I think actually in the John's free gift thing there, in the 1950s, I'll talk about this as well too. But I mean, I wasn't born in the 1950s, but I even went back to 1950s charts. This is how the charts work, and I hope you can get a good understanding of. I did this session to share with you and coach you and help you that we've got to remove all this crap from the charts and think we need all this magical stuff to know what's going on. It's like, no, you don't. No, you don't. Just simple charts like this. But what do we do, especially us blokes? We're going to find something really simple and make it really complicated. Really, really, really complicated. Where'd that go? All right, here we go. Cool. So I hope you can see, guys, that so guys, what I'm teaching you here is one trading technique, okay? One trading technique. I mean, one chart reading technique. And if that's all you did was just focus on this alone, if that's all you did was just focus on this alone, you'll be such a much better trader. Right? You'll be such a much better trader. Just by I'm talking about facts here right now. There's nothing, I'm talking about the facts here. So I hope you can see, guys, that this is it's such a powerful thing, but it's why most people don't do well in the markets because of the things I've been talking about in this session here. So let me just quickly how was the larger time frame? That's not what this session is about. But yeah, as I was saying before, this is one technique to use. But if you want to take it to another level, then you could start to add the higher time frame, the weekly chart, to see what that's telling you as well too, and then you can start to really combine that. But that's more advanced there, Savage. I hope you can see, Savage, that for people that don't even understand the charts, don't even understand how to read the charts, or even confused about the markets, I'm trying to give them something, just one simple thing that I can start to use today to start to get some less confusion out of the markets. So I hope that makes sense. Good day from Africa. B. The trend is your friend. Exactly right, John. But yeah, can you throw the 9-day on that? No, Savage, no. That's not what this is all about, Savage. It's just about the market itself. And the 50-day. No. Well, I use the 52 moving average on all my charts, whether it's a 2-minute chart or a 3-minute chart or 5-minute charts. Don't ask me why. I just use the same moving average across all my charts. And all I'm using the moving average for, guys, in my particular trading system is just to see where momentum is. Because if I've got the moving average nicely pointing up, I know there's a lot of momentum behind that trade I'm getting into, which I really like, by the way. Makes sense, right? Because if we have a strong momentum in one direction, if I have a nice upward momentum, right? And then guess what? And then I have a nice bullish trade, that's just going to really help me with that trade because there's a lot of momentum. If I have a nice short trade and then the market's going down, guess what? It's going to be a nice momentum there. That's why if I bring up this one here, right? Look at this one here. So if I bring up this trade here, look at this here, right? The moving average was nicely pointing down. Wasn't strongly pointing down, but it was still nicely pointing down. And then if I look at this one here, you can see what is the moving average doing? Very nicely pointing up at the time. So, and that's why this was such a very high probability strategy. What is it? Momentum up, pullback, breaking past previous highs. Way we go. Use the fuel. Savage, yes. Oh, well, that's Savage, yes. Definitely understand what you mean by the fuel there. But when we have a time phase, yeah, the time phase is a pullback. Now, time phase could be a sideways period, or it could be like even this is a time phase. If you're looking at the markets, right? If you're looking at the markets, Savage, and you looked at, say, the S&P 500, you would have this. You would have time, and time. All right, and then now what we have, and then we have time, which is what? Time. Oh, sorry. No. Price. Price. You'd have price. What is price? For you people that are brand new to the markets and stuff like that, price is simply, it's a technical term to say that the market is moving in one direction. Okay, it's doing price. It's moving in a direction. So we have, call it a directional move. It's called price. And then what do you have? Then you have what? A pullback against the trend. This is time. Time is like the market's having a pullback to have a bit of rest to go for another one. Time, resting phase, a resting phase. So you could call this a directional phase and a resting phase, a directional phase and resting phase. And so as you can see, right, this is how the markets work. Price time, or directional resting. But then sometimes we can go through a bit of a no one in control where there's no upward trend. So as you can see, that's how very simple. Yeah. You're so funny. John, you're saying Amazon. What about Amazon, man? You've said that in 3 or 4 or 5, maybe 6 times in the chat box. What about Amazon, man? The thing is, John, is this, okay? The thing is this, John. What I want you to do, John, okay, is I want you to take the techniques that I've shown you in today's session. Instead of asking me what I think about it, why don't you grab what I've taught you today, go over to the Amazon chart and say, okay, let's actually do this ourselves, right? Because how do you get good at this? How do you get good at reading these charts? Just by doing that, right? And I'm not being, and please, John, don't think I'm being arrogant or whatever here right now, but the only way for you to get good at this, right? So if I brought up the Amazon chart right now, right? The only way for you to get good at this is what? Is for you to actually do it yourself. Now, guys, sometimes when you see a market that's really gappy and it gaps everywhere, then yeah, just be careful of that, okay? You can use these techniques, but if you're seeing a thing that's gapping up and gapping down, like through here, or through here, when a stock starts to do that, I am out of here. So, all right, I am out of here. So, but what am I looking at here right now? I'm just looking at the last couple of months on Amazon, right? That's all I'm looking at. So yeah. So that's what you want to do. JNUG, time, and forever time. Really? Let's have a look at JNUG. I think JNUG is actually not doing time. Actually, well, let's actually use it. Let's actually start here, Mr. 99. And let's start with this, right? Let's start this. What is this here? We have a low. We have a higher high and a higher low. What do we get here? We got a broken past previous highs. But did it continue? No. What does that mean? Well, it means that the trend is now likely to end because it didn't continue. Now, yes, it's likely to continue when that happens, but it doesn't happen all the time. Look at this here, high, low, run up. Now, this also goes into other things as well too, but we have a high, then we have a low, then we have a lower high, and now we have at support. So we have really no one in control. Yeah, so we have a lower low, lower high, potentially double bottom, yada, 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 yada. Oh, yeah, the weekly JNUG. Yeah. So, guys, the purpose of me doing this session here is when we're looking at stocks, like someone asked about Facebook, all right? Let's actually just remove the coffee. What I want you to do, that's what I was saying before, what I want you to do is start to bring up a couple of months worth of charts and then start to do this yourself on the chart so you can start to get good at identifying the highs and the lows and the peaks and the troughs, which is the same thing. And then from that, right, from that process, you can start to get a good understanding on what that particular stock is doing and so on and so forth. All right, so what's happening through here on Facebook? If I just do same thing, sideways up. This is a low, this is a high. This is what? This is a higher low. Did it break past previous highs? No. Did it make a high low? No. So who's in control right now? Who's in control right now of Facebook as I speak? Even if it's made this slight high through here. Who's in control this last couple of months? You can have buyers in control, sellers in control, or no one in control. Right? As I speak right now. All right, we know the answer to that, right? No one in control. Because no one in control is sideways. It's not a high low or it's not a lower high. It's sort of like double bottom, double top type thing, right? So, and this is why I say, guys, it's if you want to get really good at this, spend time. This is where you should be spending your time, not focusing on what Donald Trump says. Crazy John in control. Not me. I'm always in control of my trading. Yeah, I only wait. For me personally, I only wait for someone who's in control. Then I trade. Like, yeah, it's like this trade here. This Nasdaq trade. Who's in control? Buyers, right? Low, significant high low. Well, yada yada yada. So I always wait for someone that's because why? It's because how the market to work. So once again, guys, if you'd like to learn more about like this sort of stuff here, then go to johnsfreegift.com. You can watch a video there and see what's in this gift package that you can try it for free. It's a free to try, free gift that I'm doing. So johnsfreegift.com. Or if you'd like to come and spend 3 days with me and live with me, then go to johnsevent.com. You see a video there, talks to you all about what the event's about, how you can live with me in $1 million house. I can teach you all this sort of stuff and trade live in front of you as well too. That's coming up really, really shortly. So go to johnsfreegift.com if you want to start to get ahead, or if you want to come to the event, johnsevent.com. Thank you very much, guys. I hope this really helps you out. Start to use this, guys, in your trading. I guarantee you're going to start to see a massive improvement in your trading. Talk to you soon, guys.